Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Mike Van Dulken, Head of Research at Accendo Markets. And we're going to look at UK PLC. And you brought along two charts which kind of really give us an idea of where we are as a country, the economy, and certainly the underlying stocks and the currency. So talk us through the FTSE 100. What's going on?
So we had a sharp sell-off overnight, albeit limited, in reaction to this news that the UK is prepared to offer a more significant Brexit settlement sum, which would go some way to unlocking the deadlock in negotiations. By no means all the way. The Irish situation remains perhaps even more tenuous.
Yes.
This is just a monetary figure, which can be spread over many years, even decades. So if actually the impact could be very limited, it's just probably more the principle of it, which is going to be seen as more of a negative for the Brexiteers. So we fell back from the highs of yesterday, which were around 7,470, in reaction to, I think we have another chart there showing that the pound, although my long-term chart probably doesn't show it as much. There we are. We've been on a rise there. This is a weekly chart, so you don't quite see the sharpness of the move up and down and then up rather yesterday. So we sold off late yesterday, and then there was a bounce on the perceived clarity. Of course, a stronger pound is a hindrance to the FTSE, which, although we can claim UK PLC, not much of it is UK anymore.
True, very true.
Very huge. I mean, there's many names which are exposed to the UK, but the percentage exposure in terms of the components is a lot less. So that stronger pound's a hindrance in that it reduces the value of any profits and indeed international dividend income, be it in euros or pounds, back into euros or dollars, back into pounds. So what's interesting here is that while it took the FTSE from the highs, it didn't have a huge impact. It still leaves us not far from record highs. And if anything, I'm very interested here in this trend of falling highs resistance going all the way back to September 2014, which, if it does put a cap on cable here around 135, there's probably a bit more exposure for the FTSE to cable than there is sterling dollar or euro sterling. If we get a cap here and it does usher us lower, it's a benefit to the FTSE, so it could actually be the architect or the engineer for getting us back towards the record highs. We're the odd ones out at the moment. The DAX is not far off. The Dow Jones, the S&P have made fresh highs, so it could allow us a bit of catch up. It all depends on what is actually offered next week in Brussels by Theresa May in terms of the actual figure and what we're prepared to stump up, and indeed if it does unlock the next stages of negotiations, which in my view are even more important than this.
And just briefly honing in on these Brexit negotiations now, there's been figures touted about anything up to kind of 100 million euros, maybe it's 50 million billion, I should say, billion, if only, yeah, 50 billion sterling. But it does feel that both sides of the camp, this is the pro-Remainers and the staunch Brexiteers, are saying this figure's too big. So you've got, that's the problem for Theresa May. You've got, both ends of the spectrum are now saying we don't want to pay a big divorce bill, and that at the moment when Theresa May is kind of on a bit of a knife edge with regards to her future political career, will that potentially cause some problems?
I don't think anyone ever expected the bill to be zero. We would have liked to have been as close to zero as possible. 100 billion, don't forget, represents long-term commitments to a very long-term project. This is not a simple 2-3 year budget. If anything, the budget is 7 years plus, and while you renew to the budget, your long-term commitments are even further out. So, my analogy was always, if you're going to leave a rented accommodation in the dead of the night, you can't expect your deposit back. Anything you've committed to, that is going to stay in place. So the 100 billion, I think, is very long term. Don't forget that's a gross figure.
Billion.
Billion. That's a gross figure. Once you net it off with the assets that we own, we can get shot of, brings it down to something more like 50. And I was reading that could be spread over 4 decades. If that works out at £1 billion a year,
That's a good deal.
It's not a bad deal, and if we like to think that sterling might recover more in the meantime, it would you know, if it is done, if those are linked to euro valuations, might even be even less over time. But you're quite right. The pro-Brexiteers never wanted to pay anything. I think they always knew they would have to pay something. The less, the better. But it's true that even the Remainers are prepared to pay something. You know, the more the bill creeps up, the more they're likely to fight back. That said, if it does unlock, if it is what's needed to unlock the rest of it, you know, there is a price to pay. But from my view at the moment, it's nothing. I mean, 50 billion is, you know, a small percentage of GDP at the end of the day. The more thing is, how does it leave us with Ireland and the potential hard border? And indeed, are they prepared to put a spanner in the works?
Good stuff. Well, very insightful, and thank you very much for coming in and explaining. Actually, the bill may be spread out over a few years. I think that's important to a few viewers, having seen the headlines over the recent days. In the meantime, Mike Van Dulken, thank you very much for joining us.
Thank you.